Thank you, and thank you to Alex for hosting this fantastic event. We are all very pleased to be here. I have very esteemed colleagues on my panel today. We are the Canadian component of cannabis in the house. Thank you. I'm just going to turn it over to my panel to introduce themselves. We'll be doing just a couple of presentations so that you can get to know us a little bit better and know what services we offer in Canada and how we can help you raise capital and go public if that's something that you're looking at doing. So I'm just going to turn it over. Anna, if you wouldn't mind introducing yourself. You guys' microphones are.
Hi, my name's Anna Sarah, and I'm Director of Listings Development with the Canadian Securities Exchange. We are a stock exchange on the other side of the border and host the most cannabis companies than any other stock exchange. We are also open for business for U.S. companies, which has been great things for us and put us on the map.
Hi, my name is Maruf Raza. I'm the accountant in the room. I'm with a firm called MNP in Canada. We got in very early when Canada was legalizing medical about 5-6 years ago. We act for probably half the issuers in Canada. And since then, we've broadened our scope to obviously, we're the only firm in Canada that'll really do US listings. And now globally, we're working where anywhere cannabis is legal. We're trying to bring them into Canada and help some of our people there.
Hi, good afternoon. My name is Mark Lawson, and I represent Claremont Capital Partners. I'm based in Toronto, and I'm really here wearing two hats. One being a director of a listed company on the Canadian Securities Exchange, so here with the rest of the team to promote the virtues of accessing capital and listing on the Canadian markets. And number two, also represent an overseas family office that invests in the cannabis space.
My name is John Kirk. I'm a stockbroker from Vancouver, BC. We are a Canadian-based dealer. We have a wholly owned subsidiary called Haywood USA. We finance a lot of cannabis companies, private, public, and we have the unique ability that we can service US investors that are investing in Canadian-listed companies, and we can deal with all the legends, all the resale restrictions, and this has been a fantastic opportunity for us. We're investors, we provide service, and happy to talk to any of you after.
Great, thank you guys. I'm just going to start by introducing you to Stockhouse in general for those of you who are unfamiliar with what we do. We are one of the largest small cap investor bases in Canada. We have over 1.3 million unique online investors every month visiting our site. So it's a hugely trafficked financial portal. Our membership is, basically we have over 8 million visitors a month, and they're coming to our site to do their due diligence and research any publicly traded company with a ticker symbol on any North American exchange and do their due diligence. We aggregate content, so you can look at stock charts, you can look at quotes, you can look at any press releases and materials of your favorite companies. And basically, our investors are looking to invest in the small cap space. Cannabis in particular is a huge component of our site currently. And they're spending time on our site. They're spending up to 9 minutes. So they're really looking and reading and researching what investment opportunities are out there currently. We have a membership base of over 400,000 members and 136,000 opt-in subscribers in our email component. So membership is free on Stockhouse. And we have sort of a unique component online. It's called our bull boards. And our bull boards are an unmoderated almost chat that our investors are going to communicate with each other, again, by ticker symbol, to discuss investment opportunities, what's going on with the company, et cetera. So there's a lot of communication. Every week we put out our top buzz on the bull boards, and it's basically the most viewed stocks on site, which really gives you an idea of what investors are looking at, what companies they're keen on, that sort of thing as well. Interest on Stockhouse has changed significantly in the last 18 months. We've been around for about 25 years, and traditionally we had a lot of interest in mining and metals. In 2018, with cannabis coming on the scene, that's completely turned itself around. With cannabis tech, blockchain, that's well over 60% of what our retail investors are looking for and looking at online. Our top reads, again, are significantly in cannabis. So we have a new investor, just to give you an idea of what the landscape is looking like in the retail investment community. Finally, the millennials have come into capital markets. So, 18 months ago, people were saying, oh no, millennials aren't going to invest in public equity. They're not going to look at that. They may be looking at crowdfunding, maybe, but cannabis has completely changed that. Capital markets, they proved the capital markets completely wrong. So we have significantly increased our millennial investor on site. And millennials are quick on the uptake. So they're looking for things they can relate to, and that's why cannabis fit the bill for them so well. So it's a great audience that you can target to teach them about your company and what you're doing, and really get the word out there and amplify your message as far as what makes you unique. And as you sort of start to look at going public and work down that road, just letting people know what your milestones are with your company that you're planning on hitting. On that note, I'm going to turn it over to Anna Sarin. Again, she's with the Canadian Securities Exchange, and she can speak a little bit more about what the CSE does and how they can help take you public.
Thank you, Cindy.
Sorry, I'm just going to flip through here. Where's yours?
If you keep going.
There.
Hi. If I could get a show of hands in the room, how many of you are investors? Oh, what a great room. Like I said, my name's Anna Sarin. I'm with the Canadian Securities Exchange. I'm going to get into some information about what it looks like to go public. So hopefully I don't bore you too much. We are based out of, our main operations are in Toronto. I'm based out of our Vancouver office. And basically what happened is there was a change in the healthcare program in Canada. And we took the stance as a stock exchange that we would allow companies to list with us that were applying for their application. The other exchanges decided that you need to already have your application. And the way that the platform was built out, you had to grow your facility, build your facility to get to that place, which obviously requires a large amount of capital. And it's very difficult to go find those sums of capital. You can't go into a bank and borrow the money. So the opportunity for us allowed these companies to come flooding to us. At the same time, what happened is the retail investor absolutely adored the product. So they were willing and happy to invest in the space. So this started around 2014 on the Canadian side. Out of the 475 companies that we host, about 125 of them are in the cannabis space. About 50 of those have US assets. The US entrants came in. Our first application from a US company was Golden Leaf Holdings, and that was in 2015. I love this chart. So the CSE is a overnight 15-year success. And you can see as we trucked along, slowly growing as an exchange, what's happened over the past few years has very much been driven by the cannabis sector. We have 124 cannabis-related issuers. That's growing so quickly that this is probably already out of date. 25 billion enterprise value of cannabis companies, and $2.6 billion was raised in the US cannabis sector in 2018. Again, it's happening so quickly that number is probably much more. This one's really interesting to watch. So take a look at the US one in 2017 and the numbers that were raised versus 2018. And what we're seeing the trend is that the Canadian space, although it did quite well, we have some issues with our legalization process. So a lot of these companies, although they have huge market capitalization, they don't actually generate a huge amount of revenue. And the retail investor is starting to figure that out. But the US companies, and where the opportunity there is on this side of the border, is you have fantastic companies that actually generate revenue, that actually have assets. And so you're seeing a lot of the Canadian companies in the space start to go into consolidation mode. They have a lot of capital, they don't have a lot of business. So they're coming on this side of the border and they're trying to gobble up as many US assets as they can. As well, US companies are just coming on our side of the border to go public. This really is starting to become a global play, and my hope is that, we had the opportunity over the past few decades to be known across the world in the junior space for the resource sector and mining. I'm hoping that we'll be the next leaders in the cannabis space. Like I said, there's lots of consolidation that we're starting to see. And consolidation, really there's just so much ability to raise capital that people are racing out there. The other thing that I'm starting to see, and it's mainly on this side of the border, is the branding side of things. So everyone's racing to create their brand. There's obviously a lot of product that's coming to market, so it's really hard to stand out. Everyone wants to be the next Coca-Cola of cannabis. I'll try and go through this part pretty quickly because it's just technical information about what you need to go public. But please do, if you ever have any questions, give any of us a call at the exchange, and we'll happily walk you through the nuts and bolts of it. You basically need to become a qualify as a reporting issuer. You have to be an active business, have sufficient public distribution, and meet share structure guidelines. There's a few different ways that you can do this. Not all are the absolute perfect way, but for each unique company, there might be one avenue that is better for you than another. So make sure that you're working with the right people who understand capital markets and can guide you down this road. So the first route is obviously the IPO. That's probably what most people understand, the initial public offering. And people will take this route and start as a brand new company. They'll file a prospectus with our commission and raise capital at the time they go public, also gaining their shareholders. The next route is called an RTO. So this is traditionally for a company that had an active business, it didn't succeed, and they want to create shareholder value, so they're going to acquire a new asset. Sometimes this is the right move for your individual company, but it does have its own glitches in it. So quite often, if the company was in an active business outside of the space, you need to do a change of business, you need to get shareholder approval, so there's some added steps to it. There's also a non-offering prospectus, and that's essentially for a company that already has their shareholders. You need at least 150. You already have your working capital, so all you're doing is filing a prospectus with the commission and going public. Typically, people will take this route because the shareholders that come into the private company, it provides them with an exit strategy. There's something else called shells, and I get this call many times a day. We don't have a shell program, and what a shell program is when somebody builds a company with no intention of putting in a business. They then go and seek out the business once it's been built to bring that into it. So we don't have a shell program at the CSE, but our listing requirements are much less arduous than other exchanges. So there really isn't any reason that you shouldn't be able to go through the RTO or IPO process. Business requirements, demonstrable revenue, recent history as a listed company, aka if you were listed on another exchange, minimum working capital, and resources to achieve stated objectives for 12 months following the listing. We don't tell you what you need, you tell us what you need in the next 12 months as far as your working capital requirements. If you go the IPO route, the one nice feature we have in our policies is builder shares. So as the founders of these companies, we know that you guys are all very entrepreneurial and deserve to reap the benefit of building these companies up. You can offer out 25% of your outstanding shares as builder shares. Basically, a company to be public, it needs 150 shareholders. 10% of that needs to be free trading. I would highly suggest that you always have more than 10%. It's unfortunate when we see companies stick right to this and then they go to market and go, well, no one's buying my stock. Well, only 10% of people have stock that they can trade. So it's really a good idea to make sure that, like I said, you're working with the right groups of people who are bringing in the right shareholders. Cannabis companies do have some added requirements. Obviously, it's still not federally legal here. So the way that we have taken to it is we just want you to disclose all of those risks to your shareholders. I think for an exchange that has 475 companies, I think we have about 170 in the queue is the last number I heard. So we're growing very quickly. We see a huge opportunity in the US, and especially in the cannabis sector. We're open for business. Thank you for your time.
Thanks, Simon.
Hi, everybody. So, wanted to briefly chat about the accounting side, not to bore you guys, but we wanted to talk about accounting specifically because a lot of the issuers that are coming north of the border to get capitalized, one of the big kind of bottlenecks that they end up getting into is not understanding the rules that are required to go public in Canada. So we wanted to, and one of the main items is the financial statement side. So we wanted to talk briefly about what those rules are, because if you prep in advance, it's going to save you a significant amount of time as part of the process. And from a process perspective, go public can take 2 to 3 months. It can take 6 to 9 months. So depending on how prepared you are with the financial aspects of your deal and of your numbers, you're going to end up on the shorter end of that time scale. So the primary requirement, if you're a company thinking about going public in Canada, is you need 2 years of audited financial statements. The beauty from a Canadian perspective is if you haven't existed for 2 years, that's okay. You can come in as a new business with less than 2 years of operations. So especially for the companies that are in the cannabis space, sometimes they're newer, but they have the right idea and the right team, you can actually go public without having this long history. So if you compare that, for example, with the US usually need to have 3 years of operational results that you need to report, which is not the same in Canada. So that's quite attractive from a new company perspective coming in. So again, both years need to be audited. There are a lot of smaller companies that also choose to go public in Canada because we actually have great venture capital money. And so our public markets in Canada actually play the role that you guys may be used to from a venture cap space. So a lot of venture capital money is raised here. So not all of the companies are sitting there with 50 million in revenue. We have smaller companies that do. So what the nice thing is that our exchanges recognize that, and so to provide less burden on those smaller companies, you only need 1 year of audited financial statements if your revenue and assets are under 10 million. So that's quite beneficial. It eliminates a lot of cost burden in terms of the going public, so it's something you should definitely keep in mind. Depending on the timing, you'll also need interim financial statements for your latest quarter. You don't need to have those audited. They are reviewed, which is a lower level down, but again, it's a little bit more streamlined. And the final financial item that you'd need as part of your listing is what's known as a pro forma financial statement. So that's, we use the word pro forma, but it's not a projection. It's not how the company is going to do. It's just a financial statement that affects the transaction to say, here's how you're going to look like as a public company with all of your shareholders, with all of your financings. And that's not audited or reviewed, but it's something you have to have in the back of your head as part of this process. So one key item for the people in this room, so in Canada, we use international financial reporting standards. It is different from what you guys are used to from an American perspective being US GAAP. So for the international people in the room, they know exactly what I'm talking about. For Americans, US GAAP is not permitted. And there can be substantive differences. So if your service providers or the people you're working with right now from a financial perspective are not versed in this, it's an area you may want to think about. From an auditor perspective, so obviously as a public company, you're going to need an auditor both before and after. Before you go public, you can use an auditor that's not registered in Canada. If you're public, your auditor has to be registered in Canada. And so we work with issuers, and we have partnerships both in Canada and the US, because obviously not everybody plays in the space, as you guys know, in the US, and certainly in Canada as well. Most firms will not touch anything with US operations. Okay, we'll get into a little bit more details as we go, but that's sort of the high level.
Great, thanks so much, Maruf. All right, now that you know a little bit about who we are and how we can help you and what we do, let's get into raising capital in the cannabis sector. Maybe I can start at the end with John and Mark. You guys have a lot of experience in this area. What kinds of financings are you seeing in the space currently? What are the company types that you're seeing? At what stage of growth are they at? And what's really whetting the retail investor's appetite at this point from your perspective?
So in the last 2 years, there's approximately $6 billion raised in cannabis. That's a lot of money that's been sucked out of the system. I don't think we're going to see as much this year. I think that the money is looking for maybe more unique opportunities. You really could have bought anything 18 months ago and made some money without doing as much research as I think you're going to have to do now. I think the ancillary opportunities are very exciting. This could be anything packaging, transportation, security, distribution, insurance, banking as it relates. It's not going to be as easy, but I think the opportunities have never been greater. There's 200 plus public companies, as I understand right now. There aren't 200 phone companies. There aren't 200 beverage companies. I think we're going to start to see some M&A in the coming years. If we're talking about the cultivators, at the end of the day, it's a plant. It's a strawberry. It's a tomato. Margins are going to get squeezed. Prices are going to come down, especially as we open up statewide. I think that means more M&A. I think you have to have more scale. Like John Sally said, if you can find the Louis the 13th or the Louis Trays or make yourself unique, then you have an opportunity, whether that cottage brewery type model, I think you're okay, but it's going to be about costs with the cultivators, and I think the ancillary businesses are the most exciting for me, and that's where I see a lot of the new money flowing.
So I want to touch on, I guess, a few things that John mentioned, because it's a very interesting time, as he mentioned. The last 24 months we've seen unprecedented liquidity, and we'll see if that continues. But I just want to speak a bit to valuations. And in my previous life as a banker, we'd always say valuation is an art form and not a science. So if you look at, we take a look at, where things are right now. A lot of the U.S. multi-state players are trading at, from a valuation standpoint, an average of about 6.8 times revenue and about 22 times EBITDA, which is interesting. This morning was looking at a research report focused around some of the Canadian LPs, and maybe this is, learn from us Canadians on the stage. So if you look at two of the bigger players, Canopy and Aurora. So Canopy has about 30% market share. I think some of the Canadian LPs will do about $1 billion in sale between rec and medicinal. And what's interesting is Canopy and Aurora are already reporting their Q2 and Q3 numbers for 2019, and the estimates that they will report anywhere from negative 37 to negative 44 million in EBITDA. And that's really, as they're ramping up, they're incurring all these costs. So my point is we're seeing private companies that are looking to raise money. Their valuations are being underpinned by their forward-looking, EBITDA and revenue numbers for 19 and 20. So that then begs the question, as an investor in a nascent industry like this, where there's very limited history of operating, sometimes you need to take a step back from the hype, because no one has really started to report yet. So it's really starting to change, I think, the way investors are approaching new companies, and we're starting to feel like it's not enough just to put together a sexy presentation and project $100 million in EBITDA for 19, and that's it, because we're starting to see the chickens come home to roost, especially in Canada, in terms of what's actuality versus what I like to call the FOMO moment and the hype. And as John mentioned, there was just this big retail rush. No one wanted to miss out on the next tremendous opportunity, and we kind of joked that more unicorns were created in the cannabis sector in a quarter than probably here in Silicon Valley in the last 2 years. So, just to take a step back, I think investors are starting to look more. I mean, the instrument of choice right now is really convertible debentures, and some people are using caps on valuation to protect their upside and downside. But the point I think I'm trying to make is as much as there is a lot of excitement in this industry, and I think it's tremendous what's happening, and the whole value chain has changed, and we think more people need to be looking, as John mentioned, on the ancillary services, whether it's supply chain and logistics or banking or anything else. Part of us really need to go back to the fundamentals of these businesses. So that's really what we're seeing right now.
Great, thank you guys. Did you want to chime in there?
Yeah, I was just going to say, I think obviously it's been a big hype and we've seen it going and running for a little while. As an investor, what I would start looking at in new companies coming in is the ability to raise capital doesn't necessarily mean that you need to or should. So some of these more tightly held structures might be something to look at, or if you're looking at going public, you don't necessarily need to raise hundreds of millions of dollars and dilute out your shareholders. That's really hard to maintain in good and bad markets. So I would definitely take a look at more tightly held structures as an investor.
Perfect. Maroof, you have seen a lot of U.S. companies coming to list in Canada. Can you speak to any major points of consideration for a U.S. company that is considering listing on a Canadian exchange?
Sure. So I think preparedness is obviously, for any company, particularly important as part of a go public transaction. As I indicated, your timelines to go public can wildly fluctuate depending on how prepared you are going in. So some of the stuff we talked about, you need to know what it is like to be, a Canadian public company. You need to have people who understand, the international accounting rules. One particular area on the accounting side that is specific to the cannabis industry is we're captured under this agriculture standard that exists in accounting. The key takeaway for this group is we have to fair value the accounting plans as they grow. So it ties into some of the EBITDA discussions that were happening. In the cannabis world for cultivators, you recognize your profit before you sell. And it's kind of a weird rule, and there's a lot of judgments and estimates that go into it that people are wholly unprepared for. And so a big part of that EBITDA that comes in, and people are obviously trying to reconcile it out, is a big sort of non-cash amount that's a fair value pickup that you basically pick up. So you have a half-grown plant, it's 50%. Well, what you do as you grow is you recognize the profit on that half-grown plant before you sell it. So it's very confusing to investors. It's something that ultimately has to be reconciled. So that's something that there's a lot of time and effort that goes into coming up with that modeling. And the securities commissions are looking at that very closely. So that's something, from a purely financial standpoint that, we need to deal with. The other part, and this is particularly a U.S. issue, on the tax side. For the founders on the tax side, there's a U.S. IRS issue called inversion. And what that is when a U.S. company exits into a different jurisdiction, so a company coming public into Canada, as an example, in many cases, the U.S. doesn't recognize that as an exit. So they continue to consider you as a U.S. entity. Canadians, now because you're a Canadian company, expect you to be taxed as a Canadian company, and so there's a potential risk for double taxation. So it's something we structure around, and we need to, but it's something we need to deal with, because otherwise you're going to be in a situation where you potentially have two countries looking at you from a tax revenue perspective. So I think that's really the high-level side of it.
Great. Anna, maybe you can speak a little bit to what the benefits are to U.S. companies, being as that's where we are, to going public on the CSE. What is the advantage of a U.S. company listing on your exchange?
Well, I'm their only option, firstly. There's obviously with legislation going on this side of the border, it's really hard to engage in the capital markets at this moment in time. So your ability to list in Canada, I know it's probably a little foreign to people to think about listing their company on an exchange in another country, but there's been some real huge success for U.S. companies. And I think everyone has the desire at some point to grow and move into a senior exchange, and that doesn't take their ability away. What it does is it lets them start off as a public company on our exchange, enjoy the benefits of being able to raise capital anytime that you need to because you're set up, and giving your investors their exit strategy. And anytime you want, you can move to the senior exchanges. The other thing about us is we have a very close relationship with the OTC markets. So a lot of our companies that do come and list with us, once you're listed with us, we're a recognized foreign exchange with OTC. you automatically get your OTC ticker, and now it allows your US investors to participate in your stock.
Perfect. Okay, and along those lines, maybe John, you can speak to this. Haywood Securities is accepting U.S. clients currently, so that's a bit of a change in Canada as well. Maybe you can explain how U.S. investors can actually invest in Canadian public companies.
Absolutely. So it's been very difficult for a U.S. resident to invest in a private placement or prospectus offering. Most U.S. banks haven't been able to touch it the last 2 years or so. Haywood Securities, through our platform, can actually service a U.S. resident who wants to access some of these more lucrative placements. When you participate in a private placement or an IPO, you'll often get a sweetener. That'll be a warrant. It'll give you potentially 50 or 100% more upside. You're really missing out if you don't get in the deals, so to speak. We've seen many in the last year that if you were in the IPO or the RTO listing offering, they'd open up at very nice premiums, and you really never had a chance. Many of the platforms in the U.S., they're talking about going live. I know through OTC there are some options, but if you want to invest in a Canadian-listed company, you're better dealing with a Canadian dealer. We know how the stocks trade. We have more of the liquidity. And it's been a fantastic opportunity for Haywood, because what we're seeing is we're seeing so many amazing investors who are investing in these companies. They can't get liquidity. They come to us, and this gives me hope that this market's going to continue for a while, because I'm dealing with ex-BlackRock guys, ex-Goldman guys who've gone and set up family offices to participate in these things. And they're telling me that all their friends on Wall Street, they cannot wait to get into cannabis. They have handcuffs on. They think they're going to come off this year. And I think that really is exciting, because any of us who are investing now, there truly is a lot more money that wants to come into the sector that can't or hasn't figured it out. So that could be the next wave for all of us.
Great, thank you. I'm going to throw this out to all of you. Where do you see the next wave globally in the cannabis sector? And Canada is obviously a global leader in this sector, so what other opportunities in your perspective do you see coming up?
So I think, like, when you look at it at a very macro level, the last couple of years, certainly in Canada, U.S. is obviously carved out of some of this discussion just because of the way the regulations are here. But in Canada, the last few years, it was an arms race towards cultivation space. Who can raise the most amount of money and grow the biggest and baddest greenhouse or cultivation space? Nobody actually asked the question, is that actually accretive? What's your cost? Because nobody was paying attention. It was what Mark was saying, is people, we have this kind of fictitious valuation that was there, but nobody actually said, are these companies going to be profitable? So I think people are recognizing that, cultivation in a place like Canada is maybe not the highest and best use of resources. And so what we're seeing at a macro level is a lot of these Canadian companies that are very well funded, cultivation is going to be commoditized. Yes, there's going to be a premium element for the premium brands, but most of it is going to be going into extraction. Going to be going into, yield. So you don't care, at the end of the day, what you care about is the cost. And so I think what a lot of the Canadian companies are doing, or other companies that are coming into Canada worldwide, is it's a focus on, low-cost cultivation leading to extraction, and then leading to. So I think we're going to see a lot of that movement happening, and I think Canada is well capitalized, either for those companies to come to Canada themselves and become public companies, or for the Canadian, the big guys to go out and basically secure that. So we're seeing a lot of Canadian companies going out and securing licenses in low-cost jurisdictions. I think Canada will continue to be the IP and capital center. We've done that role in other industries, like in mining and oil and gas, and it's almost like it's replicating itself in this sector as well.
Great.
Yeah, I think it's already starting to happen. I mean, the next frontier is really in emerging markets. As an example, 2 weeks ago, Pharmaciello out of Colombia listed. I think their stock was probably up 200 or 300%. So, that's really the opportunity. I think if you look around the world, sometimes we have an insular view of our own backyard, whether it's in Toronto or California. But as an example, if you're going to Sao Paulo or Mexico City or Lagos, Nigeria, you're talking about cities that have 20 million people, with 7% GDP growth, and this is really the opportunity. So, whether it's the EU, we've seen companies that have already obtained licenses in Denmark and Israel, wherever the case may be. And you know, we also need to think about outside of North America, there are other jurisdictions where you have ideal climates for cultivation all year round. Bogota, Colombia, outside of Medellin. So, you know, I think we really believe, you know, as valuations maybe start to get frothy in North America, we really need to start to look to emerging markets, and it's already starting to happen. I mean, we're seeing transactions in sub-Saharan Africa. You name it, it's coming. I mean, yesterday somebody was talking to me about Papua New Guinea, which is maybe, it's a tricky jurisdiction in the middle of nowhere, not much infrastructure, but I think if you want to expose yourself to returns, you really need to start looking at the emerging markets. And to your point, you know, we can argue that maybe the cultivation play is getting commoditized, but if you are an LP here and if you have an export license, how do you ship that product to the EU? So hence comes in the whole supply chain and logistics piece in the value chain. So there's a tremendous opportunity to really invest outside of North America in different parts of that whole cannabis value chain in the emerging markets.
Perfect. Anna, you want to weigh in on that?
Yeah, I think what you're going to see kind of in the near future, I think everyone's really excited to get involved in the recreational space. We've all been in the medicinal side for a few years as this has evolved. So I think the companies that I'm seeing kind of really get a lot of attention in the market is the companies that are doing the pure recreational play. As well, I think you're also, as discussed and Mark said, the global stuff is really starting to come to play. And I think the people that are coming to market, you know, we had a downturn in the small cap space that lasted about 5 years, and a few of us held on. But what was nice about it is this has really kind of brought, and it's been brought up a few times now, it's really brought in the next generation of investor. And the next generation of investor has a completely different experience than we did when we started, because they have discount brokerage accounts and they have access to information that is immediate. It's at their fingertips. It's right on their phone. I mean, we don't realize it's been a short period of time that we've had access this immediate to information. Definitely would guide people to go and talk to proper professionals. I think it's going to be tough for investors. We're not quite sure where it's going to go because we don't understand this new investor that's come to the table, and they're moving along the markets as they learn, right?
Definitely. Okay, thank you very much for all your input. And at this point, if we are going to throw it out to you guys. If
Yes,
you have any
indeed.
questions.
One more time for Cindy Broad and the fantastic panel. It's very informative. Does anyone have a question? Anyone? Bueller, right here. All right. You're good. You're quick with the questions. Here we go.
Mike from Oregon. Do you see any company out there putting together an emerging market index fund?
Who wants to take that one?
I mean, we've seen some companies like institutional asset managers starting to put together funds, but to date have not seen any asset managers that are focused strictly on the emerging markets. Maybe that's you. I don't know.
Yeah,
It's a great idea.
so there is a public company in Canada that it's not a fund, but it has a focus of just going and securing licenses. You know, so there's a couple like that. So that's kind of their business operational mandate, but they're not a fund. I think in Canada there are ETFs that are cannabis type ETFs, but it's not a emerging market ETF or anything like that.
Name of that company?
Of the ETF or the company? We can share it offline.
Fair enough. As soon as I sit down, man, you're from asking. Nice socks. All right, here we go. I would like to commend all the men wearing fancy socks today.
This is regarding the price pressure. How do you see the price and the possible profit margins curve look like moving forward? What are the major drivers? And secondly, are there other product category at the end of the supply chain that might emerge that might have impact on that profit pressure?
Well, as the accountant, I can answer the first one. And the first one, not to be facetious, every pitch that we hear across this room, and I'm sure you guys have heard, every person, there's two things they talk about: how their growing technique is the best and how they are the lowest cost producer. And they've got it figured out. So until we actually see those results, it's impossible to say. All I can tell you is in Canada, people are struggling to get under $1 all-in cost per gram. In the US, maybe it's a little bit lower. When we see sub-Saharan Africa, they're at 10 cents a gram all in. When we see Colombia, they're at 35 cents a gram all in. So you know where your targets are. We know the top lines, right? So I don't know where they're going to shake out, but that's what you're competing against.
I think it's real early days, and my advice to everyone is bet on the people who can execute. They have realistic expectations. We've seen so many of these presentations with these hockey stick graphs where they're going to go from 5 million to 20 million to 200 million in 3 years, and it's just not believable. I hope it's all true, but as Mark said, the chickens will come home to roost. These presentations that have been used to market and raise billions of dollars, it's going to be a reckoning for some of these companies, and some of them will execute. And I'm betting on the people who have a track record, not just in the cannabis space, but as businessmen, as people who've gone to the markets and have had success year over year, different industries. That's what you want to look for. No promoters.
Yeah, I think one thing I'll add is I personally and humbly believe that you guys have a tremendous opportunity, because one can argue that regulation in the U.S. kind of made the junior capital markets extinct. So, unless my numbers are wrong, I think California is the equivalent of like the 5th largest economy in the world, I think. So what we see in terms of the difference between the Canadian companies and the American companies, I'm not being unpatriotic, but in the U.S. there's just a history of building bigger brands or house of brands in much bigger markets, and that's a tremendous advantage for any entrepreneurs in the room that want to access capital in Canada and list on the CSE. I mean, shoot, your former Speaker of the House, John Boehner, sits on the board of Acreage, which raised probably $500 million and trades on the CSE. So there isn't a better case study, I think, for all of you in the room.
I think the other part of it is, and this is where there's a big difference between the US and non-US globally. The US, this whole concept of a vertically integrated operator where the farmer is the retailer and the distributor and the dispensary, that's a very, it doesn't exist in any other industry in the world, right? The pharmaceutical company that makes opiates does not grow opium, right? Poppy seeds. And so the question becomes, can you be good at everything? Can you be the best retailer and the best farmer? I mean, economic history would suggest otherwise. But because of the way, and Canada was the same, because of the way the rules were written, you had to be, right? You had to be, part of the entire process chain. So Canada, we're already seeing that, right? Micro licenses are coming out where you're going to specialize. You're going to be extraction only, right? You're going to buy your product, and you have no interest in cultivation. Why would you? You're a pharmaceutical extraction person. What do you know about growing cannabis, right? Why would you bother learning, right? When somebody's doing it perfectly and efficiently. And so I think from a product perspective, who knows what products are going to come out, but the segments are absolutely going to separate. US, who knows, but rest of the world, it is going to be different people doing specialized aspects of the value chain.
Thank you all so very, very much. Let's hear it once again for the panel. I'm sorry we're out of time for questions. We have to keep moving on. I'm sure they'll be happy to talk to you on the other side of the wall over there. What would you like to say? You have a microphone.
I have my microphone on.
Oh.
Or your microphone. I just want to say thank you to the panel and let you guys know that we are all available all day for any questions. Stockhouse actually has a booth that we're sharing with the CSE in the main exhibit hall. So if you do want meetings or you want to come pick up a card or you have any other questions that you didn't get to ask us, please, we're all happy to take your questions. I also just wanted to let you know that we have partnered with ICBC and MMP, and we are putting on a portion of this conference with some of the exhibitors that are here today, Garden Society, Bang, just to name a few, Plus Products, Flocana. Wagner Dimas as well. So that online conference will be on, you've got a card in your bag, February 20th at 9 a.m. You can jump on and see everybody presenting their companies live. And then you can ask questions of all the CEOs live online as well. So it's a text-based chat. You can learn about the companies and then ask questions directly to the management teams and the CEOs. And that is produced as part of the event as well. So please be sure and check that out. Thank you so much.